Hi guys, welcome back. We are going to go through my trade today and price action. It's Thursday, the 13th of November, 2025. Right, let's get into it. Let's just replay where we first opened. So, ignore all this, please. That's just my drawings from earlier. But yeah, we opened here at this huge opening range gap, and I've marked out the lower quadrant, constant encroachment, upper quadrant, and obviously the higher, where we settled at 4:14 yesterday and where we opened at 9:30 today. So we come up, opened here, we come up, take this internal sell side, tap into previous day low from yesterday, and then begin to displace lower. We also take this sell side in the next sort of candle, open up, again re-respect now Tuesday's low as well as opening range gap low. Right here, significant level. This is the first fair value gap formed in session, formed in the AM session. So yeah, always mark this out. First presented fair value gap, extend it to the right because this will always get used as a key level throughout the session. Placement. Again, another CB formed. Just moving price on a little bit. This CB gets respected, body closures out of it. What I like about this, still got this portion unfilled. Strength to go lower. To the downside here, we've got several key levels. We've got Monday's low here, sitting just below constant encroachment of this week's new week opening gap. We've got this new day opening gap within sort of the upper quadrant of the new week opening gap. So yeah, I mean, this sort of that sort of area is going to be key in where price is likely going to draw towards. If we keep up this sell side power, we're gonna draw to these key levels. So yeah, we come up, fill in this part of the CB, leave the upper half of it, showing strength. This discounted wick. Look at this, absolutely fucking beautiful. Discounted wick, come up, hit the midpoint of it, displace lower. Next candle, new week opening gap, higher. Just following the algorithm. I mean that in itself could have been your entry model. Seen maybe in a seconds time frame could have been something like this. I mean, look at that. 6R. Yeah, moving on. Yeah, again, we move lower past the new date. So for this candle, past the new week opening gap high. Back up here, opens, immediate displaces to this new day opening gap on the 7th. Then we continue to displace to the upper quadrant of the new week opening gap. This SIBI gets completely filled at the constant encroachment point. Again, still respecting it, respecting this level now. The new day opening gap. Completely filled the SIBI now. Although the wicks can do the damage, but body's still respecting this level. Body's still respecting this level. Look at that. but we're near the where are we now? Yeah, we're 2 candles off the macro, so this is where I'm starting to open in my eyes to see, okay, this manipulation move hit the key levels. Now I want to see some form of reversal. I've got one unfilled inefficiency. Got this first presented fair value gap in the session. Got these highs. Moving down, let me just get rid of that. So this CB, I was turned to an inverse because we've pushed past it. Most inverses, we will come back down and retap. So we've got now this inverse gap. Do we come down and retap it? Yes, we do. I always want to see, well, ideally, the top half tapped and the bottom half left open, but as long as the bodily closures don't come past constant encroachment of the inverse gap, that'd be ideal for me. Here, so we tap the inverse. Now you can see this big premium wick. What I like to see as just sort of confirmation for me is this. I mark the previous wick out, the premium wick out, and then I want to see constant encroachment getting closed above. It shows price should go higher and should displace quickly. So I've got that. That's two confidences for me. I also note that the macro's just opened as well, so let me count. Is it bigger? Alright, so the macro, I mean, could have been literally within here on the either 15 second, 30 second. But I like to wait for sort of one more minute confidence, so there you go that. First fair value gap formed within macro key level again. Doesn't touch the constant encroachment. Body's completely respecting outside of it. Really strong sign of price to go higher. Displacement from that. And then my entry was, I used the second time frames to enter, so I'll show you that now. So this is on the 15 second. This grey box is the 1 minute fair value gap. Sorry, right, yeah, so this grey box is the 1 minute fair value gap. Just on the 15 second time frame. So as you can see, look, we looked into it and then displays from it immediately. Shine the strength as well of the fair value gap is we don't spend a lot of time in it, we just immediately tap it and then displace away from it. So on the 15 second, we've got this displacement, we've got there's 3 things within this that I quite like. So we've got this inverse, we inverse this bearish SIBI. So that could have been your entry off of here in the closure. We've got what I used is this blue line. It's the order block which formed from this 15 second closure outside of it, which is where I entered. Also got this fair value gap, which you can see price respected. Left the gap at the bottom here, which you want to see is also in line with this inverse gap, which price come and taps and then immediate display. So you've got sort of 3 or 4 entries within that, but I use the order block. Stopped just below this low where the inverse gap was. Yeah, TP was, this is a 1 minute unfilled SIBI, constant encroachment of that. which I will show you now, which got hit within literally, let's see. So entry was here within about a minute and a half, 2 minutes, but that's what you want to see. You want to see price deliver quickly and efficiently to the unfilled gaps. That yeah, so one contract was off there, and then I wanted to ideally leave a few runners for the first fair value gap forming in the session, but so a little 2R, not bad. Right, going through this now, and we're still respecting this CB. Come back down below this, forming an inverse gap. So there's two possibilities of what could possibly happen next is where we close below it, can retap this and move lower, or push past it, reclaim this as a bearish, as a bullish fair value gap to push price higher. Still flitting or about. Right, then we see displacement. Displacement through. Back to this civvy. Back here. This is used as a breakaway gap as we redistributed out of this sort of range. Okay, next. So this civvy now turns to an inverse gap. Also within the inverse gap we've got a buy side inefficiency, sell side imbalance. Again, we just miss out on constant encroachment, sign of strength to go higher. Still got an unfilled fair value gap here. We've still got opening range gap. We've still got Tuesday's low. Still got Wednesday's low. Still got liquidity resting here. We've got this huge opening range gap, which I want to see get filled. So we fill the inverse and the buy side. The bullish order block. Bullish fair value gap in institutional order flow. Could have been your entry off here, and let it run. Still respecting it. And then form an order block coming out of the inverse gap. There's your entry. If you want that extra confirmation, entry point could have been off this level on here. If you want that extra, stop just below constant encroachment of this wick, where we're going to ride it up to 1, opening range gap higher, 2, previous day low, boom, look, there's your partial. We continue higher, and there's your full take profit. But can you see how quickly we rebalanced, pushed lower, pushed higher, rebalanced again to this order block, just wicks it, and then just within 3 candles, objective reached. That's what you want to see of a price delivery, just quick, efficient activity, just to this I sort of came off the charts after this, but let's see what price does. Tell me there's not an algorithm. Reach these higher, reach previous day low for the last two days. Look what we do. Push past the first percentage fair value gap. We completely wicked into it. Just mohawks above constant encroachment. Let's push slower. Back to this buy side. This inverse gap. Completely fills this. Again, there's another model within that. What is stopping you from taking long here to these highs, and then a short here. There's so much money to be made. These small, if you know what direction price is going to go, there's nothing stopping you from catching these short scalping moves just within the range. But you need to understand why confidences and PDRAs hold, and the strength and weaknesses of how they hold, into the draw and liquidity of these key levels, because the algorithm will always draw towards them. So yeah, we push back into this inverse gap, move lower, see if we can come back to this original inverse gap. Yep, we do. Push past it. Back to the new week opening gap higher. See what reaction we get off this Sibby. Leave this whole upper half. We move lower.